Good afternoon. Welcome to this year's symposium. In recent decades, broadband has transformed our personal lives, how we do business, and the economy at large. In fact, there was a recent report by the Federal Communications Commission that observed that, like electricity a century ago, broadband is a foundation for economic growth, job creation, global competitiveness, and a better way of life. It enables entire new industries and unlocks vast new possibilities for existing ones. It has changed how we educate children, deliver health care, manage energy, ensure public safety, engage government, and access, organize, and disseminate knowledge. As our digital economy grows, digital inclusion represents economic inclusion. Yet broadband access and adoption continues to lag behind for certain population segments, including low and moderate income individuals, as well as those who live in rural areas. This is referred to as the digital divide. In other words, the gap between people who have access to broadband services and know how to use the internet and those who do not. The digital divide leads to further economic, social, and political disparities for low-income and underserved populations. The Community Reinvestment Act provides a significant opportunity to help close the digital divide across communities. The CRA, as we call it, is a law that encourages banks to make loans and investments and provide services to LMI communities. Our keynote speaker today will discuss how the Community Reinvestment Act can help to promote digital inclusion. Barry Wides is the Office of the Comptroller of the Currency's Deputy Comptroller for Community Affairs and leads a Department of Community Development Professionals located here in Washington, D.C. Barry is widely recognized among bankers as a go-to resource for community development issues. His staff engages in outreach to banks and their community partners, the development of policy, and the creation and distribution of educational materials on community development issues. Prior to joining the OCC in 1999, Mr. Wides worked at Freddie Mac, where he developed products and strategies to achieve the company's congressionally mandated affordable housing goals. He previously served as the Deputy Director of the Resolution Trust Corporation's Affordable Housing Program. Mr. Wides is a certified public accountant, holds a Bachelor of Science degree in accounting, and an MBA from Indiana University. It's a pleasure to introduce to you my colleague, Barry Wides.
Well, good afternoon, everyone, and thank you so much for that kind introduction, Bob and Krista. I'm really pleased to be here with you. This is a topic that is particularly interesting to me and of concern to our agency, the Office of the Comptroller of the Currency. Banking requires these days that people have digital literacy and access to high-speed internet in order to become and maintain a part of our financial system. Gone are the days when somebody can rely necessarily on being able to go to a bank branch to conduct their banking. Unfortunately, as time has gone on, the number of branches has gone down, and particularly in some rural communities, it's increasingly essential that consumers have access to internet to be able to do their banking, and as our younger generation comes up, we only can expect that the reliance on digital is going to be increasing rather than decreasing into the future. So obviously you as educators, policymakers, know firsthand, as Bob and Chris have both mentioned, that the digital divide creates these huge inequities between those who have access to broadband, those who have the knowledge how to use the computers, both in the workforce, in the schools, and as they go out and conduct their lives in the modern economy. And so as the lack of equity between those skills and the access continues to grow wider, it just furthers economic inequality more than we have today. So this is a concern to the Office of the Comptroller of the Currency. And as I mentioned, and Krista mentioned, it's a concern to banks, which is very encouraging to us as regulator of national banks and federal savings associations. The banks understand it's in their financial interest to ensure that consumers of all income levels are digitally literate and have that reliable internet access through broadband networks. Banks help their own viability and bottom lines by working to achieve universal digital inclusion so consumers of all incomes and all communities can access online the many financial services that banks are increasingly offering. Today, many consumers have little inclination and time to visit the local bank branches, lessening consumer demand for the traditional brick and mortar branches. And as we all know, we increasingly are expecting digital access to our money 24 hours a day, 7 days a week, from wherever we work, live, play, and travel. We rely on a plethora of digital tools, from online banking to very cool apps that help us budget, save for retirement, and carry out our investing goals. And that helps us build wealth and maintain economically vibrant financial lives. Unfortunately, these digital tools are out of reach to Americans living in many rural communities, as I mentioned, and some low-income urban areas that just don't have reliable internet access. And I direct you to a recent study by the Brookings Institution that looked at depth at just how many people this affects across the country, and particularly households that are low and moderate income are disproportionately affected in a negative way. Fortunately, we're seeing some promising signs on this front. Banks are improving digital inclusion by forming win-win partnerships with educators, community groups, and other local leaders. I'll highlight just 2 examples and share steps that you can take to create your own successful bank collaboratives. I'll also discuss the steps the OCC is taking to reform the Community Reinvestment Act framework that regulators use to ensure bank compliance with the Community Reinvestment Act. By taking these steps, the OCC seeks to ensure that framework reflects today's banking environment and future generations and communities can benefit from CRA bank activities. But first, some background for those of you that aren't familiar with the OCC and the Community Reinvestment Act. The OCC's mission is to ensure that banks we supervise operate in a safe and sound manner, provide fair access to financial services, and treat customers fairly and comply with all applicable laws and regulations. We fulfill our mission in part by conducting periodic examinations of banks that assess, among other things, a bank's safety and soundness and compliance with the Community Reinvestment Act. The CRA was enacted in 1977 to extend and clarify the long-standing expectation that banks serve the credit needs of all segments of their communities, including low and moderate income neighborhoods and individuals. While the way consumers bank and banks serve customers has changed dramatically over the last 40 years, CRA remains a powerful tool. Today, the CRA continues to encourage bank lending, community development investments, and other activities that promote vitality and economic opportunity in low and moderate income communities across America. The CRA also encourages banks to offer a full range of financial services in these communities because they're critical to helping individuals and families build financial self-sufficiency and wealth. To put simply, the CRA in our current CRA regulatory framework provides banks incentives, and they have a vested interest for advancing financial and digital literacy and financing broadband internet access to low-income, distressed, and rural communities. To ensure CRA compliance, bank examiners periodically review the loans and investments a bank has made in low and moderate income neighborhoods where the bank has its main office branches and deposit-taking ATMs. And after each bank After each exam, a bank receives a CRA rating ranging from outstanding to substantial noncompliance. The bank's CRA rating is publicly posted on OCC's website. A low CRA rating creates challenges for banks applying to open a new branch and to merge with or acquire another bank. In CRA exams of large banks, examiners also review CRA qualified investments. These investments may include grants and donations for community services such as digital and financial literacy or other educational programs that primarily benefit the needs of low and moderate income individuals and areas. Underserved urban neighborhoods from San Antonio to Chicago's South Side and in rural communities from the Rio Grande to Appalachia are beginning to benefit from initiatives that are seeking to improve financial inclusion. I want to highlight two such programs supported by bank partnerships. The first collaboration involves Capital One Bank. The bank's Future Edge initiative is investing $150 million in community programs over a 5-year period to enable more people to thrive in our digital economy. Through Future Edge, Capital One is helping people develop skills for the jobs of today and tomorrow, harnessing technology to help entrepreneurs succeed, and helping people of all ages take better control of their personal finances and financial well-being. Capital One credits the program with helping many consumers, including a 13-year-old girl in Queens, New York, who loves animals and technology and dreams of being a veterinary technician. Like many public schools in low and moderate income communities across the nation, her middle school curriculum didn't offer technology training. So when at her YMCA she learned about Capital One Coders program, she signed up. The program connects middle schoolers across the country with Capital One associates who teach students the basics of coding and schools that don't offer the training. She's now learning the digital skills she'll need for her dream job. A second bank collaboration involves Connect Home USA. This is a nationwide public-private partnership of community leaders, local governments, nonprofit groups, and banks and other businesses to financially support locally tailored solutions that narrow the digital divide. With grants it receives, Connect Home provides free or low-cost broadband internet access devices and digital literacy training to families with school-aged children living in HUD-assisted housing. With reliable internet access, their children can do homework and continue learning at home. Connect Home launched in 2015 in 27 cities in one tribal nation. Since then, 37% of HUD-assisted households with children in these communities now have internet access through Connect Home. The program has connected 20,000 people to home internet services, deployed more than 7,000 devices to families in need, and conducted more than 200 digital literacy trainings. I'm pleased that national banks across the nation are supporting Connect Home through their CRA programs and helping digitally challenged cities such as San Antonio, Texas. In San Antonio, 1 in 6 households don't have a computer and 1 in 4 households don't have internet access, according to Connect Home. Wells Fargo is helping to improve digital inclusion in San Antonio. A $25,000 grant by Wells Fargo's Neighborhood Lift program helped Connect Home deliver 16 hours of digital skills training to families and children in San Antonio's HUD-assisted housing with free or low-cost access to broadband access devices and digital literacy training. To date, Wells Fargo has invested $125,000 to help bridge the digital divide by providing more than 1,600 people with digital literacy training, over 450 computer devices, and connected more households with internet access. So how can you create successful collaborations from banks? I think that's what you're going to be spending a good amount of time talking about later today and tomorrow, but I'll give you my thoughts to get you going. First, identify the community initiatives and groups promoting digital or financial literacy, development of broadband networks and initiatives in rural underserved areas, and other programs designed to meet the credit needs of low and moderate income individuals, schools, or communities. Second, contact and ask the banks in your community to support community initiatives that improve digital inclusion in low and underserved communities. Third, remind the banks that their support will help benefit students, schools, and communities they serve, and may, as an added benefit, help them fulfill their CRA responsibilities. So if I've convinced you to form partnership with banks in your communities, I encourage you to take 2 additional steps. First, I encourage you to visit the OCC's website, where you'll find a newsletter that we published focused on expanding internet access through bank financing of broadband initiatives. This newsletter and a related video explains how banks are helping to finance these initiatives. In addition, I'd encourage you to contact one of the OCC's 12 district community affairs officers who operate out of the OCC's offices across the country and can connect you with bank programs in this space. By forming partnerships with banks in your communities, you'll help build on the CRA's important legacy in communities across America. You'll also help the OCC as we seek to build upon CRA's legacy. The OCC believes that banks can and must do even more to serve the financial services needs of low and moderate income communities. We believe banks would do more if we modernized our CRA regulatory framework. In so doing, OCC can ensure that CRA works better for everyone, including those of you that are supporting digital inclusion. By modernizing our CRA framework, we can ensure that the CRA reflects the dramatic changes that technology has brought about in the 42 years since the CRA was enacted. At this moment, each of us has in our hands or our pockets or our bags a cell phone. And our cell phones and our laptops allow us to bank 24/7 from almost anywhere in the US and throughout the world. As we discussed earlier, you can obtain loans from banks and non-banks with just a few keystrokes, all without visiting a traditional bank or meeting with a banker. This powerful tool allows you to conduct nearly all the activities that 4 decades ago you had to go to a neighborhood bank branch to do. Given this, a CRA framework that's limited to evaluating a bank's compliance only where the bank has traditional branches and deposit-taking ATMs is badly outdated. For this and other reasons, the Comptroller of the Currency, Joseph Otting, is currently in talks with the other banking regulators about how best to modernize CRA framework. The goal, as Comptroller Otting has repeatedly said, is to strengthen the CRA framework to encourage even greater community and economic development lending and services and investments by banks for residents and small businesses in low and moderate income and underserved areas. These ongoing talks are the result of actions that the OCC took in August of 2018 to initiate a broad public dialogue on how best to modernize the CRA framework. The OCC did this by issuing a Notice of Proposed Rulemaking, or an ANPR for short, which solicited ideas from all stakeholders for the best ways to reform the CRA framework. The ANPR's preamble stated that the goal was to find ways to help banks more effectively serve the convenience and needs of their communities by 1, encouraging more lending, investment, and service activity where it's needed the most, 2, evaluating CRA activities more consistently, and 3, providing greater clarity regarding CRA qualifying activities. The result, the OCC believes, would be a modernized framework that would ensure more timely evaluation of CRA performance, offer greater transparency regarding the CRA ratings, and then promoting a consistent interpretation of CRA and encourage increased community economic development, loans, investments, and services in low and moderate income areas. These changes are consistent with and build up on the CRA's original intent to meet the credit needs of the communities that banks serve. The changes would also better align with how technology has transformed banking and reduce the complexity, ambiguity, and burden associated with these regulations. In response to the OCC's ANPR, we received nearly 1,500 comments from community groups, local leaders, banks, and others, and a very, very high percentage of the commenters very much supported the notion that the bank regulators, the OCC, the Federal Deposit Insurance Corporation, and the Federal Reserve Board, issue a proposed rulemaking to make necessary changes to the CRA framework. The OCC is hopeful that ongoing talks between the bank regulators will result this summer in a joint proposed rulemaking being issued. If and when one is published, all stakeholders will be given the opportunity to review the proposed regulation and submit comments, which will be reviewed and considered before an interagency final rule is published. The OCC believes that a modernized CRA framework will ensure that even more loans, investments, and services, including financial and digital literacy education, get to the communities where they're needed the most. And doing so, we can strengthen and preserve the benefits that the CRA can offer for generations to come. In conclusion, I want to thank you again for inviting me to be a part of this important discussion on improving digital inclusion and reducing the digital divide. And I look forward to hearing your suggestions and learning how bank partnerships might be of interest to you and discussing more with you how you might form them. So thank you again for the opportunity to be with you today.
So we have a few minutes to take some questions, and I'll do the Phil Donahue thing and run the microphone across the room for folks who have questions. Yeah. Well, please, Steve, if you could introduce yourself and your organization, and then your question, please, or comment.
Steve Corona. I'm with the Fort Wayne Community Schools, and just finished completion of a 2-year term on the National School Board Association's Board of Directors. I just want to make sure that I heard you correctly, that the permission or approval for my bank to use its CRA money on digital inclusion is going to be dependent on issuance of a final rule that you expect to be made this summer? Is that? I just want to make sure I heard that correctly.
Well, there are many activities that are eligible today related to digital inclusion activities, financial inclusion activities. So modernizing the CRA framework, leaves open the possibility that the kinds of activities that might qualify for CRA might be able to be broadened beyond what we offer today. And we received a lot of comments that made suggestions on how we might do that, including some suggestions that came from organizations interested in broadening the types of education activities, for example, that banks might get CRA consideration for. So I guess to answer your question, CRA eligibility exists today, and comments and recommendations were made to us for ways that we might further expand that.
So do banks assume this is something they have to do, and if they don't do it, somebody in your office is going to punish them? And if that's the case, are their investments weighted so that certain investments with certain partnerships are given greater credit than an investment with another organization?
Well,
or is it just a dollar amount that they have to satisfy?
Well, I mean, banks have, they're evaluated for CRA without going into too much of the detail, but you have your community banks that are maybe under $250 million, $300 million. They're not subject to nearly as extensive a CRA obligation as a bank that has assets of over $1.2 billion. So I would say that for your banks that are, over $1.2 billion in assets, and there's thousands of them in the country, those banks have a test that they're evaluated on every 3 years. 50% of that test looks at the lending that they do in their communities. 25% of that looks at the provision of financial services, their branch network, and so forth. And then 25% of it is based on their investments, qualified investments, including community development investments. And the way we've defined community development investments today is that if a bank makes a grant or a donation that would be considered a community service, the way we define it, the bank could get CRA eligibility for that amount donated, or as we call it, invested. And so, yes, when we do a bank CRA evaluation, we look a whole range of activities, their loans, their investments, and then services, and then we issue them a rating, outstanding being the highest rating, and needs to improve being the lowest, with almost all banks being satisfactory, with a small number of them being outstanding and a very small number being needs to improve. So that is what we do. One of the activities that those in this room could pursue with banks would be to make suggestions as to way they could fulfill their community services component of their investments through activities that would promote financial literacy and digital inclusion with low and moderate income individuals in low and moderate income neighborhoods. And then the two initiatives that I mentioned that banks were involved with probably involved some nature of a investment, a loan, but most likely a grant that benefited digital inclusion in the way I described. One was in public housing, the other dealt with education for students in underprivileged neighborhoods. No, please, go right ahead. No, go right ahead. I can hear him. Oh, okay.
If I went to your agency's website, could I find a list of the CRA investments that my bank's made to local organizations in Fort Wayne, Indiana?
What you could find is, let's say you picked a bank that you knew was very active in Fort Wayne, Indiana, and let's say Old National Bank is a bank that we supervise that I'm pretty sure has a presence in Fort Wayne, Indiana. So you could go to the OCC's website and find the most recent CRA performance evaluation for Old National Bank, and then page through it until you got to Fort Wayne, and then you might find some discussion of the types of activities that they're involved with in Fort Wayne related to community services and investments. And that would be a way to start with a bank in Fort Wayne, Indiana, that has, a presence. And I do know for a fact that Old National Bank is very focused, starting at the CEO level, around financial literacy. That is one bank. In fact, I was at the Consumer Bankers Association conference a year ago or two, and they received an award for their very outstanding work in this space. So that's an example of how you might then make the connection to a bank that might potentially be interested in partnering on an initiative.
Thank you. Letitia, I think you had a question. And if you'd introduce yourself, please.
Hi, my name is Letitia Dowling. I'm from Grant Makers for Education. But my question, it stems more towards a community initiative, and it might expand from his question that he just asked about access and transparency. And so I am right now located in South Carolina, very rural South Carolina. And as I was here last year and began to learn more about the CRA and the law, I found that just how do you find out whose responsibility and priority it is in your region. And so just wanting to get more clarification from you, if that's your office and your website. So for me, like there's a Wells Fargo in my area, there's a community bank called BB&T, and when I picked up the phone and called them about the CRA investment, it seems like it's still a foreign language to them, and they'll call back, or it's under a regional umbrella that expands across many states. And so as this local with local foundations and community organizations that are trying to, again, work under the CRA umbrella and get banks to do more investments, more loans and grants, how do you figure out who that person is or where that particular branch is that has that responsibility over your area?
Well, that is something that one of our community affairs officers could help you with. On OCCweb.gov website, go to the community affairs page, and afterwards I can give you my card and send you a hot link. But essentially, we have 12 community affairs officers working out of the OCC's offices around the country. The closest one to you would be in Atlanta, and her name is Nancy Gresham Jones, and she could provide you the name of the Wells Fargo CRA officer that you might contact for your region. BB&T is not a bank that's supervised by our agency, but later today, Jeannie Bonds, who is on the Federal Reserve, on the Federal Reserve Bank staff at the Federal Reserve Bank of Richmond, could probably give you the name of a CRA officer to start with BB&T. So that would be where I would start. I think it's hard to go to a bank, particularly a large national bank's website, and try to find the person that's designated responsibility for South Carolina. When you're dealing with a community bank that's located in South Carolina, I would start, as I mentioned before, with Fort Wayne. Who are the community banks that are very active, that have a significant presence in a market? And then, frankly, I would recommend that you work through the chain of command in your organization to get a letter from the very highest level within your organization to the CEO of that community bank and request a meeting, laying out, what you want to talk to them about, and hopefully that would at least get a conversation going with, somebody within the bank that has responsibility for that.
And John? Perfect.
Yes, hi, Barry. This is John Windhausen. I'm head of the Schools, Health, and Libraries Broadband Coalition. I'd like to run a real-world hypothetical past you just to make sure that I understand how the CRA works. So let's say there's a school district that wants to try to solve the homework gap, and it serves a lot of moderate and low-income households. And let's say the school district is able to acquire a wireless license from the FCC to provide wireless broadband service, to provide internet connectivity to these low and moderate income households. Would that school district be eligible to get a loan from the bank to pay for the costs of deploying this wireless broadband infrastructure? And would that kind of loan qualify for CRA credit for the bank?
Well, certainly, if the proposed business model, is economically viable, I would definitely recommend approaching the bank about a loan. What I've seen in some of the cases where there isn't economically viability on a standalone basis, there is money from the U.S. Department of Agriculture. There's money from the U.S. Department of Commerce to help fill the gap. And so those are resources, and I can give you my card afterwards, and you can pursue this discussion with the points of contact that I have through what is an interagency working group that's focused on expanding broadband for the kinds of things that you're talking about. Would a bank get CRA consideration for making a loan like that? It's a possibility. It depends. If the build out is a very small build out in a portion of a city or a community, we have seen this from the Brookings data, where there is a community within a city that is low income or a distressed area, and does not have access to broadband, and a third party, a governmental agency or a nonprofit is coming in and providing that in the absence of a internet service provider, then, and if it's primarily serving an LMI area, low and moderate income area, there's a reasonable possibility that could be CRA eligible. But I will say that what's probably going to be the biggest driver for the bank in the scenario you described is that it's a viable business proposition and that the bank loan will get repaid. That is, in most instances, in my experience, when it comes to the actual business side of making loans for CRA, banks still view making an economically safe and sound loan that will most likely get repaid. When they go into philanthropy and grant making and investments, what we call the community development investments, that's where, that's more of a philanthropic play, and that's where many of you may want to start. Just depending on what your ask is.
Mm-hmm. Mm-hmm. Okay, good, very good. Thank you.
You're welcome.
Hey, sir. Robin Fontes. I work with Generation Tech in Arizona. We're looking at some minority school districts and bringing STEM education. But my question today is, what about the fintech space? With many of the bulge bracket banks exiting the mortgage lending that lend to a lot of these minority communities, and everything being online now for mortgages. Does your proposed rulemaking or the CRA apply to them in the framework?
So, Community Reinvestment Act applies to any deposit-taking bank or Federal Savings Association. It does not apply to any type of an entity that doesn't take deposits, and it also doesn't apply to credit unions. So I guess the answer to your question is it would depend on whether the entity, is taking deposits, federally insured deposits, and is a bank or a thrift. And many of the fintechs that we read about, we see on the internet, are not taking deposits. They're borrowing money to do what they do, or they get investments. Hedge funds are very active in providing capital to these some of these fintechs. So those would not be subject to CRA. The OCC has recently issued a policy that says that if a fintech is not taking deposits but would like a national bank charter, that we will accept applications from non-deposit taking entities, fintech entities, to become a bank. And if we do issue a charter, we have said that we would require the bank to have some type of a financial inclusion plan. It's not CRA, because CRA is a statute that just governs deposit-taking institutions. But if we did receive an application for a charter for one of these fintech charters, we would require they provide us a written financial inclusion plan, which we would then examine, as part of issuing that license.
Is there another question? When did you have a question? Oh, thank you. Okay, Carol. I'll do my Phil Donahue run.
Thank you. Carol Gordon. I was wondering whether you deal with impact at all, measures of impact or evidence of making a difference when you evaluate the banks, or if you know that the banks have any kinds of ways to determine and evaluate how successful their initiatives are.
We are very numbers driven. So, the first thing we look at is a little bit of a check the box. Is it an eligible activity? If so, yes. Is it benefiting, the banks where the bank has its, what we call assessment areas? Is it benefiting the bank's community where they have a physical presence? The answer is yes. Check that box. And then thirdly, we look at the amount that they lent or invested, or the amount of the value of the service, and then we would then count that towards their performance. But at the same time, we do have a concept where we give special consideration for certain activities that are particularly innovative, complex, or responsive, that have particularly difficult issue that they're attempting to address. And if a bank were to provide us the information when we do an exam regarding the level of difficulty, the level of complexity, the innovativeness, and the impact, that would be noted in the exam, and you can read through some of our exam reports. And let me tell you, banks are not bashful at all in telling us when they've undertaken an initiative like that, because they're very proud. It usually is a labor of love. It's an initiative that they've really put a lot of energy into, one that they probably are hoping will receive some community recognition for leadership by the bank in that area. So I would say, if you may find a bank from time to time where you can make the sell that this is going to be particularly impactful, and we can help document just how impactful it is. And in the case of the Capital One initiative that I mentioned, it's real, very understandable case studies of somebody in a very low-income school in a tough neighborhood in New York that's connected with a program that involves volunteers from the bank who would teach coding. I mean, that's a pretty innovative initiative. Another bank, a number of banks are actually run bank branches in schools that are run by the students. And that teaches a lot of different skills. It teaches financial literacy. It teaches customer service skills. It teaches numeracy, and those are programs, again, that I think we recognize as being particularly innovative, particularly impactful, and try to help particularly students in underserved neighborhoods both learn about managing finances, but also become better prepared to enter the business world.
Thank you, Barry.
My name's Kelly Salter. I'm with the McConnell Foundation up in far northern California. Our region was impacted by the catastrophic fires, so we have a number of federally declared disaster areas. And this may be a completely ignorant question, but my understanding is CRA funds can be used in federally declared disaster areas. Does that change so that if an area was not previously an LMI area, that declaration makes it then eligible, or are there other special considerations that are given in those kinds of disaster areas? And if so, what are they and how do they work?
Okay. So the answer to your question is yes. The designated disaster area is identified as an area eligible for CRA consideration, even if it's not or wasn't previously an LMI area. So that is gets to the whole range of activities that would pertain to community and economic development, including grants for activities that would be considered a community service or a community development service, and programs related to educating, reducing the digital divide, economic education, that kind of activity, in those areas could potentially be eligible. And we have a community affairs officer out of Los Angeles that's working with other financial regulators and banks on initiatives to help engage financial institutions with rebuilding and also making them aware of the broader range of CRA eligible activities in areas affected by that disaster.
Thank you.
Any other last second questions? All right. We will segue to the next, which is an informal conversation, and I get to introduce Jeannie Milliken Bonds. Thank you, Barry, very much. Thank you.